Good morning, guys. Hope you're having an awesome day so far. Bitcoin's doing pretty well. We just hit one of our supply concerns, waiting for it to retest these previous highs to hopefully act as support. And if we get that support bounce, then maybe we can get that acceptance back inside the value area above 17,000. What's up, Pluff? How you doing, man? Hope you're having a good day so far. Good morning, Sterling. What's up, man? Okay, let's get into it. So, yesterday, we were talking about quite a few opportunities we're kind of building up. So, we can kind of take a look at each individual asset and see how they performed against Bitcoin. Bitcoin dominance was a bit wonky yesterday. We had periods of weakness and periods of strength. But yeah, we broke this downtrending momentum. Let's see what we got. Is that 401k thing bullish? Yeah. I personally don't invest in, I'm not going to say don't, but I personally don't invest in 401k because I'm in Canada. We don't have 401ks. Beyond Physique. What's up, man? Coma, how you doing? Okay, so yeah, let's go over Bitcoin really quick. So we had a break of downtrending momentum right here. We had a bit of a descending Browning wedge kind of price action here. Giving us like the measurable target, like the safe target of hitting this previous high. And we hit it and we had some exhaustion. We fell down a little bit and retested the same location that we were kind of eyeing. We had yesterday during the live, we were eyeing two spots. We were watching this neckline level here because at the time the price action looked like a little bit like this, right? And it could have turned into a double top. And if it did complete and we lost that level and we had to act as resistance, we were eyeballing this area of confluence, which is a fib level between like here and here. And it's the 50-day EMA. And we had some liquidity resting down from here. So if we did break down here, we'd be preparing for longs around here. Instead, what we got, even though we had a little bit of a tease of that with this internal SFP right here, where we swept these highs and closed within range. When it closes within range with full body acceptance like this, it has a higher probability of hitting its target. And where you target when you have an SFP is the local low. And like we came down pretty aggressively, bounced off the value area low, and then we started to come up from there. But the way we closed above this key level was pretty darn aggressive. We did end up filling this gap again after we came up and hit the measurable target of the broadening wedge when we came down through here, giving people a second opportunity to jump in with this change of character reaction. Right, we had this change of character, and if you didn't, yeah, we did actually have a pretty decent one because we got above the VWAP at the time, kind of teasing us a little bit with the pullback. But yeah, so you had a couple opportunities. I wouldn't normally have recommended anyone to jump in on a candle like that because they do tend to get filled back up again. So we looked elsewhere. Well, we were looking elsewhere at the time of this breakout. We're looking at alts at the time because Bitcoin dominance was failing. So we put our attention where the attention was, right? So if there's, even though Bitcoin was pumping, Bitcoin dominance was going down at the time. So we wanted to focus on something that would more likely hit our target because of the Ethereum mistake that I've made recently. So now I'm going to be watching the dominance charts a lot more hawkishly to see, like, should I be focusing on alts? Should I be focusing on Bitcoin at the time? Because I'm a Bitcoin maxi and I prefer to trade Bitcoin every single time. But I'd rather be trading an asset that's going to be growing our portfolio during this challenge, right? So let's do that. So we got a movement back up through here, and we got We fully mitigated this supply concern, like completely, when we came up here and we had this bit of a tweezer reaction and it came down, testing the previous value area high and these previous highs here right now. If we get that additional break of structure, we have one barrier in our face that we're going to have to watch out for, and that's this previous valley area low. That's actually, I think it's a 20-day valley area low from this range-bound price action. Okay, 16 days, maybe about 16 days or so. So if we get acceptance back inside this valley area with a break of structure, then we could anticipate a full rotation back up to 19K. Now we have this downtrend level of momentum here, so we don't know if people are still honoring this trend line. So we would have to look at the order books and see if there's a sell wall. If there is a sell wall, I would expect one to be around like 18K area because we have the supply concern here and the confluence of the downtrend momentum and the point of control. So let's see what the order books look like for Bitcoin. And then we're going to look at some of the alts here. Or what am I doing? There we go. So there's no confidence over here on the sell side, not very much at least. I mean, a little bit at 16.99, 116,990 for the amount of a very small amount of about 150 Bitcoin, 140. So 116,990. So a slight undercut to the value area low. We have some sellers here for about 140 Bitcoin, 150 Bitcoin roughly. And that's what could be honestly inducing this pullback. There could be a wall here. Whenever you see a tweezer reaction, when you see like that there's kind of like a flat line of resistance, that's a good time to always be looking at the order books and see if there's could be a sell wall inducing that, right? Because if the sell walls with limit orders are stronger than the volume, we're not going to get past it. We're going to hit our head off of it until we fill all those orders. And they normally induce equal highs or horizontal levels of resistance. So we got to watch the order books and make sure that the orders are filled. Now, the one that we noticed was right about here, but it doesn't mean there wasn't one here at one point. It doesn't look like there is one now. Yeah, we do have some buyers' confidence at 115,630. But again, not very much. Actually, it's terrible. It just looks good relative to the orders that are active, but this is only 25 Bitcoin. Oh, I'm okay. Never mind. I got blurry vision right now. It's about 330. So at round, let me go back to that. 330 at 115.6 to get my horizontal line out. Brain fart again. 115.6. Okay, so we have buyers here. Right on the top of these two highs, we have buyers waiting. So if we do continue down, then we have hope for support here. Now I'll mark that just in case people are looking at the charts. They want to know what it's for. 300 BTC buy wall. So we have some buyers' confidence here. And a little bit of sellers' confidence here. But the buyers are stronger than the sellers right now. We have more buyers waiting here, 330. We had about 150 sell orders here. So based on the order books, we know that the buyers are stronger than the sellers right now. So we might see that continuation based on the data that we have currently, but we have an unclaimed high that needs to be broken. But when we get that break, we could expect a potential continuation. But we'll have a new key level that develops if we do get that unclaimed high for a new strong low that if broken will cause a change of character and could induce a range down here. And this would be considered just a range extension for this area here. But I got some confidence that we'll continue to go up because of the fact that we bounced off daily momentum here, evolving momentum. And we normally get these high volume reactions after the fact. And also, if we do come down here, think of it as a retest to this large ascending double bottom posture, right? That this could be the confirmation for that strong continuation to the measurable target. And the measurable target right now is, oh, my bad, a sec here. So the momentum-based target is basically suggesting that we could fill the supply here, mitigate the supply. So we'll leave that on chart and see how it turns out next time we're live together. We got a lot of peeps here. What's up? Good morning, Kyle. Can you see the 1 hour? Is there a change of character on Bitcoin dominance? We could take a look at that. We just finished looking at Bitcoin. So let's see what's going on with Bitcoin dominance. Well, we did break this low. We were looking yesterday at Bitcoin dominance here. Right, we had the confluence of just like failing to create a higher high after getting above the VWAP, going into the supply concern, and then we closed below our key level, anticipating for Bitcoin dominance to just continue its way down, and we got that. We were watching this as a potential barrier of support, but it barely held. And now we are way down here. So let's look at the hourly and see what you're talking about, Ben. A change of character not likely if we're going down and breaking this low. So this is a break of structure, not a change of character right here. Unless you're talking about something up higher. If it's higher, then yeah, we've had the hourly change of character reaction. It came up. Yeah, I got a little bit higher high here. SFP'd here though, and then we broke this low. I feel a little bit more confident after, well, this is an inside bar scenario, but after breaking this level on the hourly, I feel very confident about us failing and coming down, because at this point we would lose the uptrending momentum. We've tapped into the supply concern up here. This could have been a really good front run of knowledge using Bitcoin dominance that we could be failing here off the 200-day EMA, the range supply concerns. And the SFP is always a good front run to changes of character. So if you see an SFP, think of it as an attack on strong lows that could induce changes of character. And then we had the break of this key level here, retesting the momentum, and then we got a lower low, telling us the momentum's acting as resistance. And we started to spiral down ever since. But we are, like, if you zoom out a bit, we're still kind of range bound. So we can anticipate areas of interest for Bitcoin where we know that there's a stronger possibility of attention being redirected back towards Bitcoin. And that's basically what this chart's all about. It's just understanding where's the attention. So if we come down to these lows here, so these lows here, these are all going to be key areas that you're going to watch that could induce an opposing change of character. And during that time, alts will either start to slow down, have some relative weakness, and Bitcoin will be like have more attention during periods like that. So we're looking for opposing change of characters at these key levels right now. So we can mark them on our chart with this rectangle right here. We'll change the color here, a little one here, and we mitigate this one already. So we'll just mark this next one here. These are 3 little levels, some stronger than others. Like this one's obviously the bigger one that you kind of want to pay the most attention to, around 60.65%. All right, so that's Bitcoin dominance. Let's go back to the Bitcoin chart. Um, and this could be, by the way, if you're new to Bitcoin dominance, you can use Bitcoin dominance as a rule in your trading. Like you could say to yourself, like, I will not trade alts unless Bitcoin dominance is looking weak to help increase your probability of having a like stronger move in your trade. Right. So if you see something bearish happening on this chart, something's bullish is more likely to occur on your altcoin charts. Um, there we go. So go back here. All right, now we can look at, we did a trade on Chainlink yesterday. It's a small W. Would you say the value area trading is a higher or lower win rate in a bear market? Uh it's so the better question is it a higher or lower win rate in a trending or non-trending market? In a bull market, we're more likely to trend. And when we're trending, it's not that the win rate is lower. You should be focusing, you'll be realizing that you just won't have enough as many opportunities with value area trading in a bull market compared to a bear market. There's a lot more opportunities in a bear market. But this bull market's a little different, right? Because all we've been doing is ranging. So I would say, like, if you are going to, if you want to increase your win rate, you can choose what kind of bias you have based on the market conditions. So if we're in a bear market, you could only do shorts. If we're in a bull market, you can only do longs, just to increase your probability of winning a trade and increase your probability of continuations on your range trades. So rather than just focusing on the value area high as your exits, you could also anticipate continuations based on how long we've been in ranges or based on squeeze events that's occurring within the range, right? But yeah, if you just focused on longs, you have that better potential chance of the strong continuations to get those really big wins and not just the range bound wins that you're used to. Nothing wrong with just closing at the top of a range. Like if you have an exit plan, you could stick to it. But if you know how to be reactional to your value area highs or your value area lows for those continuations out of the range, then and you have the time and you're awake at the time, then yeah, I'd recommend it. Uh, can you point out a fair value gap on Bitcoin on the 15-minute? Yeah, I could do that. So I'm gonna go to the 15-minute here. They're everywhere. But we have some active right now. So this is the 15-minute. When you're looking at fair value gaps, you're essentially looking at the front candle here, for example, and you're looking at the backside and seeing what has been mitigated in that candle. So this wick here would not be considered a part of that fair value gap. But between here and here is a fair value gap. And you got to look at the front too and see what's been mitigated so far. But initially when this candle closed, almost this full candle has been considered a fair value gap. This one too, from here to here, fair value gap. And there's indicators that make this like super easy mode. Just got to make sure you're picking the right indicator. It's not lying to you. I wonder if I've got one on my chart. Eventually you won't need the indicator. You just see it and you're just like, it just becomes noise. Let's see. Well, that's not the good one. FVG, probably by nephew Sam. He always makes really good indicators. Here we go. So this is like an example of like an indicator that's doing a partial good job, right? It's if we could have this indicator show the mitigation of this wick, the indicator would be 10 times better, right? So this was a fair value gap for sure, but we mitigated most of it. So what's left of the fair value gap is something like this. This one's accurate. This is accurate. This one's mitigated, so it could be there's an opportunity to improve the indicator, basically. So long as you understand, like, mitigation, like, this is a great indicator to use to watch fair value gaps. Like, so if you anyone who wants to learn about fair value gaps, this is a good indicator for it. By Nephew Sam. How fair value gaps are born is pretty interesting. It's all about order books, really, and like the clearance of order books. If you see that there's a small amount of orders in the order books, right, and there's a big one right here, right, and these are all different price points, right, and if you have someone with a large market order buy in, it will and it was big enough to fill all these orders simultaneously until we hit this larger sell wall or something like that. Then a fair value gap is born during that time, and it creates candles like this. And what makes fair value gap so important is that when you have a fair value gap, because of all those orders being cleared, it takes a little time for the orders to be put back in, right? You might have some algorithmic bots fill it up pretty quick, but like most of retail and big players will take some time to fill them in. And we tend to, when we fill those gaps, we tend to move through them quickly. A lot like a volume gap in like the fixed range volume profile or the visible range volume profile. So it can help assist you in knowing what kind of trade setup you should prepare for. So if you have a confirmation that you're waiting for, but the candle's closing inside of a fair value gap, then the potential is of it coming back down to retest your key level is a lot lower because it price would more likely fill that gap first, and it sometimes will cause price to run away from you, and you might not be able to jump in. So whenever you see a volume gap or a fair value gap, you could turn yourself into like a breakout trader during that moment, so long as the R&R is good, if that makes sense. There's lots of different ways to trade fair value gaps, but that's like the main way that I look at it when I'm preparing for my setups. TA on dot, please. Yeah, let's do it. How do you check exactly how you know if the cell walls is bigger than the volume? Well, that's actually an easy question to answer. So on my right-hand side, you see where it says the key stats. You can see volume, and you can see average volume in 30 days, stuff like that. So it says 35.66K. Now, if the weighted value of that is less than the sell wall, so let's say, for example, there's 330 Bitcoin ready to be bought right here. We know that for sure, right? You just whip out a calculator. If your computer operates at a normal speed, here we go. And yeah, so at that price, we have buyers here, right? So at that price, all you got to do is multiply $115,000, 630 times the value of the buy wall, so 330 Bitcoin. And that's your volume. So if the volume is more than that or close to that, then we know that we're going to be mitigating that wall pretty easily, right? Or we have at least have a decent probability of when we get to around to that point. So you need to find out what the active volume is at the time and prepare for, yeah, then you'll be able to understand like how many taps you would likely take or stuff like that. You look at the exchange directly, and the candles will show you like how much volume is occurring during that time frame as well. You can click and drag on this new tool. If it works when it wants to, but it'll tell you the active volume when you click and drag on your computer. Yeah, I couldn't get it to stop, but now it won't work. But hopefully you know what I'm trying to point out here. Pluff, can you do T and dot? Yeah, sorry about that. Just want to answer that question while we were just on that subject. Uh, Ramo was saying that there's a 700 Bitcoin sell wall now at 116.5. Okay, well, that makes sense as to why we might be having this horizontal resistance here. We have a 700 Bitcoin sell wall. I gotta see that for sure. I'm not sure why I don't see it. You might have been looking at the collective orders in total, unless it's on a different exchange, because this is using 4 exchanges and combined. So if it's something like Coinbase, it won't show it on this. Okay, let's go to Dot. Sorry, I keep getting distracted. All right, Dot. How are you doing? See, yesterday, it was the 4th we looked at Dot. All right, so Dot right now is in one of our supply concerns. We did breach the, like, this double bottom neckline here. We have this, we broke this downtrending momentum. We were talking about that recently. This is a golden pocket level. That's why it may look a little weird as to why it's boxed here. But it's like a golden pocket and 76 key level here between the lows here to the highs. So we have ascending double bottom, kind of like everything else kind of does. We broke this downtrending momentum that came from this downtrending resistance from $4.67. We've been in this downtrend for about 17 days. This is the hourly time frame. We're trying again to get acceptance into a macro value area low for this 1,000-day value area, over 1,000-day value area, right? Like what we really want to see, what we're begging for, is the rotation to the value area high at $7. Now we are fractalizing, so we have evidence of strong accumulation. We have this double bottom posture, and we could be trying to print a larger one like here, right? And if this is the start of that, this could be the spark to begin the run up to the neckline for us to finally break past it and have it act as support. Not trying to build hype in you, but this could be finally the moment where we see Dot start to come back up to at least this neckline. If we fail, then we fail. We can prepare for an exit plan. Like for example, here, double top, change character reaction, loss of momentum, came up, retested, most likely a golden pocket from this low, this high to this low. Yep. So after that change character, if you don't like your R&R, then you wait for the Fibonacci retracement. We started the downtrend ever since, and now we're trying to wait for the opposing version of that, right? We're breaking down trending momentum instead of uptrending momentum. We saw here, and we want to have that change character reaction. This is the hourly time frame, and the structure is a little awkward, but we got that ascending double bottom breaking the neckline. So I'm hoping that as Bitcoin potentially retests this level, it might induce Dot to pull back a little bit and come up. We did just see Bitcoin dominance in a downtrend, so it makes sense for Dot to have some relative strength. But if we do come down and retest, it'd be a combination of this neckline and this downtrending momentum being on our support if we get that higher high. And then you can have yourself a good stop loss guard. And we're just talking about fair value gaps. So we can see here on the hourly, we have a few. Now, if we were to, we could mitigate some of it on our journey down to potentially retest this area. So let's see if we get that. We'll zoom in a lower time frames. This is the hourly. We do have a bit of rounded top. Rounded price action like this is a sign that of basically buyers' confidence is starting to dwindle a little bit, right? The pace of the buyers are slowing down. So rounded tops are usually bearish for that reason. Same thing with rounded bottoms. You got to think of the pace of the sellers are starting to slow down. The confidence is dwindling. And once a key level breaks, we tend to have that rotation down or rotation up in that sense. Here, when with this rounded top, our key level when it breaks is here. So that could induce a pullback. Find a base of support off the previous highs, and maybe get that higher high bounce for a continuation. And then mostly mitigate more than half of the supply concern that we have up here. My confidence will shoot up dramatically for DOT if we break above this level. Because at this point, we've mitigated all the supply concern. We broke this previous high, and we've got acceptance most likely into the macro value area from the value area low. And then really, our next primary boss is this point of control area. While obviously being mindful of this supply concern. That's DOT. Really, really good spot to prepare for a spot purchase. If you haven't already, you could be jumping into a position of strength at this point for a spot and hold. The hold, if you're trying to hold to $7, it could take months to get up there, right? We were hoping for it to get up there after we broke this level here, and then we hit these previous highs and saw lots of evidence of weakness, and we just kept going down ever since. So I'm hoping this time is different, that we do finally, get that break, strong momentum, and work our way up to like $7. And maybe even 10 if we get at these extreme highs again. If we're zooming out this macro range, right? Every time we tend to get above this very high, we have these high volume events that spike it up to around $10. Like here was like $9.65. Here's $11.68, $11.58. I'm not expecting DOT to ever break this level with its inflationary damage and lack of attention, but it'd still be nice to get back to it. All right, so that's DOT. I hope that helps you out, man. I'll save this layout. I got all these alerts open. I'm sorry. What else do we have? For requests, we have Kyle, could you discuss your profit-taking strategies on the 15-minute chart? Yeah, we could do that. I'm just going to look at TA for hype first, then we can jump over that. Good morning, Cal. Without the hype, please. Okay, let's take a peek. We got, last time we looked at was yesterday. What were we talking about with it yesterday? Oh, yeah. Fuck. Yeah, yesterday's. I led people into a good trade, but I wasn't able to take the trade myself for this one. Luckily, I got into Chainlink, but man, hype was ever transparent as fuck with this move. So we had yesterday, we were talking about how this was aligning perfectly with all my rules, other than one. But there's an exception to the rule when you have an ascending double bottom. I normally want to see a change of character reaction, and ascending double bottoms do not give that to you. At least the time frame that I usually trade on, which is the 15-minute. And we were watching out for resistance at this local high. Let me see. This is how I pathed it out during the live yesterday. We had like this. This one's it's hard for you to see right now, but I'll bring it up the vision. So we were expecting resistance here. We did have some turbulence, but it didn't really hold that strong, and we just kept going up. And then we eventually hit our primary target, which is the value area high. And we've been riding against the previous uptrending momentum right here as resistance instead of support. We had it as support here. It flipped as resistance and created the supply. And then we came up, had it act as resistance again, brought us back down to where we were preparing for our entry, got an inverse head and shoulders. If you were able to enter the inverse head and shoulders, it was most likely as a Fibonacci trader trying to get in on this from this wick low here to this high here. We hit the golden pocket. That was kind of the only opportunity that you could have jumped in on, because the way it confirmed the inverse head and shoulders, if you're trading based on liquidity grabs and formations, we had this really explosive 3 white knights. Three white knights is a form of momentum-based structure in a candlestick pattern. So this here, when you see a momentum-based candle, it basically means you have either a very, very small amount of wicks or like none at all, right? So if you look at these candles, we had like a teeny tiny little wicks, none on this side at all, none on this side for this candle, tiny one here. So this is called three white knights. When you see one of the white knights, it's a warning that two more are going to come, basically. So if you have a momentum-based breakout like that, you could prepare for like stronger continuations. But yeah, this was a pretty wild move right here. And by the way, three white knights is not very common in larger time frames. It's like a low time frame thing. But it seems to be the theme for hype. Loves that kind of behavior. When one person gets in, everyone gets hyped. Everyone buys hype, and then it skyrockets. But yeah, right now we're at a value area high, so we should be mentally prepared mostly for shorts right now. But if we get that break of structure continuation, then we could be leaving this value area and getting acceptance to a previous one. Now, hype likes to do whatever the hell it wants, despite what Bitcoin's doing. And whatever Bitcoin does, it really just amplifies what hype does. It doesn't tend to have relative weakness very often, basically. So if we get above this 50-day EMA after this potential break of structure, we need a higher high first, a close above this wick. And what's nice about the close above this wick for the break of structure is that it will also get above this momentum that's been causing it problems throughout this little rise and fall journey here. So we need that, we need that higher high. Then be mindful of the 50-day. We have supply right on the 50-day, a little one right here that's looks pretty intense. So if we get above this, we might anticipate some range bound activity because of the supply concerns, or we might get that opposing change of character that could cause a reversal. But what we really, really want to see is basically acceptance back inside this previous value area. We can see. Yeah, we didn't have proper acceptance into the value area through here. Let's delete this noise. We can delete this noise too. We can grab a new value area, actually. A little awkward overflow. But I'm just more worried about this acting as a barrier along the way up. So we have this little like a 15-minute order block, tiny little supply concern here, right? Whenever you see these little impulse moves, base impulse move, treat them with respect because they might not treat you with respect. Just watch out for them as barriers. We have confluence of it being basically tied between the POC and the value area low. So really all you got to monitor is this previous value area low at 42.56. If we get that acceptance into it with a break of structure, then we automatically mitigate this supply concern here. So switch this to red, send it back. There we go. A little easier to see now. But yeah, overall though, mentally prepare mostly for shorts based on its positioning. But I do have some hope that we'll get that break of structure, get above this 50-day EMA. And once we get acceptance into here, we can expect a rotation up to here again. We do have momentum that we could watch and monitor as well, right here. But based on the pace of the momentum alongside the active price action, it does kind of give us a story that if we were to get up here, if there are still sellers on this point of interest, that we hit the confluence. If we got that kind of speed, of course, we'd have to go up pretty quickly. We had to go up within the next hour or day and 6 hours in order for this to be possible. But if we get up there within the next day and 6 hours, then expect that kind of merging confluence to cause price action come down. All right, that's hype. I hope that helps you out, man. Um, I would prefer if we had a really good easy setup, higher high, come down, change character reaction, short to the value area low. That's the easy mode trade. Trying to take the long, you'd want to be already in an existing position. Trading the confirmation of a continuation comes usually at a higher risk, right? Because it only happens 20% of the time, right? The market ranges 80% of the time. So if you're trying to trade ranges at the top of ranges, your statistical likelihood of being right is higher. But follow along with what Bitcoin's doing. If Bitcoin gets that higher high and starts running up, then hype should follow suit. Um, okay, got a couple of questions. Right. So Soul Train asked, could we discuss by profit taking strategies on the 15-minute chart? I have a couple. My primary one that I use all the time is like a loss of momentum and an opposing change of character. Let's go over link simultaneously for John's Blue Star because I did close my trade yesterday using my strategy. So I'll be able to explain it at the same time. Sometimes it makes you wrong. Like, my gosh. So, yeah, I tend to look for a loss of momentum, right? Right through here. I'll close some of my trade if we lose momentum, right? I prefer like a loss of momentum after hitting a supply concern. Otherwise, I have a hard time trusting it sometimes. So if we lose momentum after hitting our head off of a key area of interest, I'll take some off the table. If we have an opposing change of character, I will either close my trade or take some off the table, depending on our positioning. Now after looking at this, waking up today and seeing what happened overnight, it sometimes will cause you to close your trade too soon. Like I would like to be still in my trade right now after seeing this. You kind of have to separate yourself from that and not let it cause FOMO or FUD or anything like that. But yeah, so that's what I basically look out for. So if let's say, for example, I entered like this long here, right? We got this double bottom, we got the retest, higher high. If you enter the trade here and you start seeing a break of structure, follows after that, then you can start drawing momentum, right? And this momentum would have kept you in a lot longer than the one that I used, right? And then if you want to like hold it, once you get that opposing change of character, you should really listen to it. So I hope that helps you out. But that's basically how I do it. It helps a lot of people hold their trades a lot longer. And what kind of momentum kind of matters too. Like if you're entering off a 15-minute time frame, you should be looking at the 15-minute momentum. If you're entering because of like a 5-minute candle, the 5-minute, I'm just gonna let you know right now, is not as reliable as the 15-minute. But yeah, I used momentum as a tool. When I first learned about it was in 2019. And I learned it just in time to use daily structure to hold a trade for like almost a year. So it's pretty intense, especially when you're looking at like swing trading. If you zoom out on, well, let's go back to Bitcoin for this. When looking at swing trading, you're looking to say like the daily momentum, and you find yourself an entry, right? You could still be holding, and I am still holding. Like I closed my futures position on Bitcoin, like my macro futures position, but I'm still holding my Bitcoin because of the confluence of on-chain data and this momentum. It really helps you like ground your emotions a bit, right? Um, that's pretty much it, man. It's just a simple trend line rule. in confluence with market structure. Going back to Chainlink, so we can talk about what just happened here. So Chainlink is kind of leading the race. It's got some relative strength over a lot of assets. So we have it breaking this double bottom. We kind of spoke about this yesterday. If this were to occur, we break above this, we would have a measurable target of 1847. We found on the 15-minute proper acceptance into not a proper pullback, but we got slight test of the value area and we got the higher high. And now this is where we are. So we're kind of on a run towards the previous point of control at 1826, where I would anticipate some turbulence. We have mitigated this whole supply concern here. We have this one here in confluence with the previous point of control, which is now basically the active point of control. But I've been watching out here. We have 15-minute order block, look supply concern alongside the previous point of control. So watch for opposing changes to character. It could bring us back down to the value area low. But this is a scenario where you would expect a higher low now with Chainlink. Now that we got this break and acceptance to the value area, we tend to use the value area as support, and we behave the same way we did last time we were in the previous value area. Looking good though. Chainlink is my second largest bag. So I'm glad to see this happening for my portfolio. Okay, so we went over link Floki. I don't think we have a Floki chart, but we do not. Okay, so let's take a peek at Floki. Oh, cool. Okay. When comparing this against Chainlink, Floki's got some relative weakness, right? Chainlink's already broke this double bottom. Floki's now testing its neckline. So it's a little bit, if this is evidence of where the attention is right now, this is telling you that most of the attention right now is on Chainlink. However, this looks like a great setup for a big move. Like we're breaking this downtrend momentum, awkwardly drawn momentum, by the way, but it's broken. Yeah. We're getting it at this neckline here. If we adjust our horizontal array, we're testing the bodies right now. That's resistance. High confidence break on the 30-minute if we get a close above this level here. The number is 0.000011335. I hate large supply assets. Like I know it's an illusion to create a low price in people's mind. What you should really be focusing on is the market cap. So it tricks early investors, or new investors. But yeah, anyways, if we get that break, see active support, we're above the 200, we're above the 50, awkwardly bouncing off it for a little bit. But yeah, it looks like we could get in on a strong continuation for a trend-based move if this neckline were to break. And I would be targeting, like each one of these little zones is an area of concern. Whenever you see like the retest, it's easier for you to visualize like the concern areas. So like here, it's an area of concern. This previous high is where there's likely liquidity resting is concern. But the ultimate target's up here, right? We start off this double bottom as the front run to this larger move up. There's obviously probably better front run opportunities down here, like this inverse head and shoulders. But at this point, you just be targeting this high, and here now we can get that continuation up. So if you're in on an existing position of Floki, this is what you want to have happen. You want to see this break of structure, support bounce here, so we can start chasing after this liquidity. Zooming out a little further, I just want to see. Okay, so it's like we have some fractalization, right? So a lower time frame, we're breaking double bottom, right? Daily, we're retesting one, right? And so you'd be targeting this high initially. Same concept before, right? If we had that, if you have an internal structure, right, and we break a key level, we'd be targeting necklines as our primary barrier of resistance, anticipating for us to potentially range. You can't ever assume that a double bottom could happen, right? You first assume that we could range off of the neckline level. Like there's always going to be a supply concern that will initiate the neckline, right? Or at least almost always. I'm freezing out here. There we go. Now we're doing the same kind of thing in the lower time frame scale to break this key level. If this breaks, then we would have the retest support bounce off of this double bottom to continue up to our next highs here. So this is starting like a domino effect to potentially bring us all the way up here based on this macro double bottoms momentum based target, right? And you'd have to mark this is a key level along the way. Send it back. Here we go. But this is interesting. I'd recommend if anyone likes to trade altcoins like this, this is a pretty good setup. Gotta have some nerves of steel to hold through any pullbacks if you want to try to get through this high. All right, so that's Floki. Pretty cool. Thanks for bringing that up. That's pretty neat. Kyle, can you please explain how we can use the order book tool and CoinGlass and the trading and the liquidation heat map? Yeah, sure. We can do that. Okay, a sec. So order book, let me just pull up Bitcoin really quick. Oh, Bitcoin's getting that bounce. Broke through that. So also mentioned here. Okay, so going through the order books. So the order books tool is free. I'll put in the link here in the comments. But basically, you're looking for areas of confidence, right? So if you see a sell wall right here, this is an area of confidence. So you're looking at this depth chart like mountains. And if you ever see like some steps along the way, those are small little orders, right? But if you see a cliff, then that's a strong area of interest. So what you want to try to do with this chart specifically, there's a bunch of different order book tools out there, but this one's nice and it's free and it merges four forms of data together. So what you do is you look at the price just prior to the cliff. So it's at 117,420 right now. And the total amount at this point is 3,550 Bitcoin. Now, if I move this $10 higher, we move up from 3,550 to 3,850. So you subtract the 3,850 from the 3,550, and then you have a total amount for a sell wall over here. The red side's the sell, the green side's the buy. So what you want to do is you want to mark these on your charts, and you'll notice that they usually align with key levels. So, for example, trend lines. If you don't trust your trend line and there are no buy orders on your trend line, then that's telling you that other people also don't trust your trend line, right? So you can look at the order books to tell you, okay, this point of interest, how many people are actually participating at looking at this level alongside me. And if you see that there's, sell orders chasing here in the order books, and then finally the orders are fully mitigated, then you tend to have these moves to the upside, right? So it helps you become more patient as a trader and waiting for the actual sellers to be gone before it can go up, because price cannot go past the sell wall until the orders are filled. And it can't. So um, that's why it's insanely helpful in your trading. You could use sell walls, you can use buy walls, as well as stop loss guards. If, for example, you have a strong high or a strong low that you're using as a stop loss guard, then the order books might suggest a little bit of breathing room, so you can use that sell wall or buy wall as a little guardian for your capital too. So it definitely decreases your chance of being stopped out. If you see anything, let's say you're preparing to take profits, you see a giant supply concern and there's a giant sell wall in that supply concern, might be a good idea to take some profits along with these people too, and just undercut them by like $10 to make sure that your order actually fills, because you're going to be put into a queue and you want to make sure that you're undercutting that queue. Like a lineup of the DMV. If you see like a 3,000 Bitcoin sell wall, that's like a DMV line. If you see like a 100 Bitcoin sell wall, that's like a lineup at the self-serve at Walmart, right? It's not really a big deal. But those big ones are a big deal. Okay, let's look at, oh yeah, you also mentioned the liquidation heat map. So liquidation heat map is like a compass in that sense. So if you go to CoinGlass, liquidation heat map, this is kind of telling you what other people are doing already as well. So the limit orders is one thing too. The liquidation levels is other forms of evidence of like existing orders that already have passed, and where people will get knocked out of the race if price were to return there, right? So here on the 24-hour on Bitcoin, we could see that, just making sure you guys can see this properly. We could see that people jumped into shorts a little too proactively and they got knocked out, right? What you want to look for on the liquidation heat map is key levels that would most likely induce a reversal. So it's kind of similar to what you'd see in the order books, where if you have a buy wall at one of your key levels, you can do the same thing with like liquidation levels as well. Liquidations are important for big traders to jump in with the least amount of slippage. So if you're someone who is trading with like $40 million, you're going to need a lot of liquidity in one area, or else you're going to cause a huge price impact on the charts. So if you look for areas with large amount of liquidity, you can jump in with barely moving the price, basically. And liquidation or liquidity is just another fancy word for money. If there's a lot of money in one spot, you prepare for entries or exits in them. Because liquidity can be used as an exit plan for big traders, and it can be used as an entry plan for big traders. When it's below the price, it's more likely to be used as an entry condition. If it's above the price, it's more likely to be used as an exit plan. It doesn't mean it can't be used as an entry plan, though. So if we break, let's say, for example, a double bottom, think of double bottoms as an inducement of liquidity. So if you have like this base, impulse move down, you create a supply concern here from residual sell orders, and we come up, we hit our head off this area. We just induce liquidity to be up here from people in shorts, right? So if we come up here, this could be used as exit liquidity to induce a range. So you got to prepare for the bearish case scenario. Look for the evidence and structure, like a double top, change of character at these levels, and you can prepare for an exit plan there. But you should also be prepared for it to be used as entry-based liquidity, or buy-side liquidity is what's normally called. And if you get that buy-side liquidity taken, and then it can help drive the price up from there. So that's kind of how you use liquidity as a tool. Now you can when you're looking at a range like this, you got to be aware of the age of the range that you're trading. So here, for example, we have a range that's about 6 days and 10 hours. And why this is important is when you go over to the liquidation heat map, you could change your time frame, your look back period of how where the liquidity has been resting within that look back period. So this is the 24 hours. So this is all the liquidity that's been added within the past 24 hours. And we were just looking at a 6-day range. So we want to try to wrap around that time using this chart. So 1 week will wrap around 6 days. So we're going to click on that so we can find out the liquidity behavior of that range. So here we have a bunch of liquidity at 111,700 for an amount of $128 million. Below this low where this wick is right here. So if I were a trader and I saw this, I would see this as a SFP opportunity. We know there's a lot of liquidity resting there. So if we swept that and we saw an SFP, that's evidence that there could be a large amount of buyers jumping in, and we could use that SFP as a tool to target at least the most recent high. Here, we have a bunch of liquidity above this neckline that started to pile up, and it really piled up from the last retest here. And then we started to come up and we took it all just now. And so now it's all cold. All this liquidity has been taken. This is all people being stopped out. This is people getting liquidated from high leverage traders. So if we get that higher high, then this could be a good inducement for a trend to the upside. But yeah, that's how you could use it, man. I hope that helps you out. There's more to it than that. It's all in the course as well. But yeah, you can reach out to me if you have any questions about it. How many more transactions on Karma to get listed? About 400, man. Yeah, about 400 more Karma transactions and we'll get listed. We're getting there. Last I checked was yesterday. So unless a lot of transactions occurred today, yeah, not very many transactions occurred in the past 24 hours, but small amount. Some decent buys that brought us up to this neckline. Our liquidity is going up alongside BNB. Cardano for Sal. Let's take a look at Cardano. ADA. Last time we looked at Cardano was the 5th. What were we looking at before? We look at the, I remember I was getting pinched against this previous value high. We had this uptrending momentum. Similar to what we saw on, I think it was Hype or Dot. Either way, we got that break, started to come down. We were anticipating some support here based on what I've drawn. We had this little demand zone. We had support before the past. If we were to sweep this low and get a bounce, we could have had a continuation up. We had that ping-pong price action that we predicted here. That's what Cardano loves to do, try to knock people out. But then when we came down, we got below the 50-day EMA. We started riding the 50-day EMA and ranging against it, creating an inverse head and shoulders pattern, right? A form of accumulation structure, suggesting that we'd have a move at least to this as a measurable target where we anticipate exhaustion. We got the exhaustion, but within that, we had the retest of the momentum acting as support, right? We want to have this occur to trust a potential trend-based move. Here is not an example. This is just like a dip out. All you can do, you can literally adjust the trend line during scenarios like that, right? We came down, we had a chest, honored it as support, came back down, had support off of it again. And then we had like this another inverse head and shoulders kind of behavior. Ugly looking, but it still played out extremely well so far. And now we're above this previous value high and above the neckline of this larger ascending double bottom. Like everything's got an ascending double bottom right now, right? But some of them are at their neckline, whereas others are above. If they're above their neckline, that means they have relative strength against the ones that do not, right? That's where all the attention is. That is a hidden message telling you that you should be focusing on those assets instead, right? Because if anything's stuck below their neckline while these are above, then yeah, that relative weakness, if we come down for a retest, those assets might be coming down to be stuck in their range. We have broke out of a falling wedge, and we have retested, and we got the higher high out of it, and we broke the more macro double bottom internal to it, right? The measurable target for Cardano is pretty crazy, but Cardano doesn't usually let us down when it comes to stuff like this. So the target is technically way up here at 92 cents. It may take a little while to get there. Usually it's about 10% of the age of the structure. So the age of this structure is about 16 days. So we can maybe see us get up there faster than we anticipated. Like Cardano is, when it likes to run, it really likes to run lately, right? It goes on these sprints and it always surprises you. Like it got up 23% in a single day here. I'm not saying it's going to do it again this time, but it wouldn't surprise me at all if it did. Based on Bitcoin's conditioning, I would suggest that it probably won't get there that fast. Like if Bitcoin gets to the top side of this range, if we manage to get that acceptance in this valley area, and we have turbulence around here, then I'd prepare for, based on Cardano's positioning, to prepare for turbulence as well, whether it be at like the confluence of this supply concern, or this one, along the way up to that journey. Just take it seriously. If Bitcoin is getting that bearish change of character reaction at its valley area high, you should potentially take some profits off your Cardano setup. There's no stop loss adaptation yet on this. So if you're in on a trade, your stop loss should still be roughly around here. Even if you jumped in around here, your stop loss adaptation would be from like here to here. If you get that brick structure higher high, then you can evolve it after that. ENA. Okay. Bitcoin dot. Yeah, here we go. So ENA. Oh, we're looking at the short-term game before with ENA. Break of momentum, bounce off this local demand, ran up, kind of failed against the VWAP and this little supply here. Came down, bounced off the point control, got acceptance below the point control, and then we hit the value area low. We can adapt this pull here to here. We can delete this noise. We can adapt this trend line here. So we basically just test out the value area low, no deviation below it. Like our last great setup on ENA was the one that we were talking about here, right? This was our measurable target, change of character reaction, deviate below value area. So all of my rules were pretty much met here other than the break of momentum. But you could have front run it with the change of character reaction here. If you didn't want to front run it and you want to wait for the acceptance of the value area, it would have been an entry around here, a stop loss around here. You probably would have been more profitable doing that than trading this, depending on your stop loss R&R, right? How you work your margin is really important when you're trying to capture your path. But right now, we have this broad momentum here. Let me zoom out a little bit. I just want to see where ENA is macro. So we're above the 200 and the 50. They just had a golden cross. It's very first. Oh, it's second golden cross. So we had one here, and we had one here, and this was our last death cross. These are lagging indicators. I'd only really take action on them on Bitcoin. But if you see them, it can build confidence in your setup. So here we're basically just recently tapped into this supply concern here. We hit our head and we had a draw back after it. And we're starting to come up to potentially get that macro break of structure for a continuation. Let's see if that occurs. But right now, mentally, you should mostly be preparing for shorts being at its local value area high. But again, if Bitcoin moves up, we could see that kind of draw, like pull up as well for ENA. We did break this downtrending momentum here. It's kind of nice, more macro downtrending momentum. So there's a higher percentage probability of us leaving this value area if we get that break of structure continuation. We just need to get that high taken. We take that high, then your first thing you want to focus on is the local highs up here that could impact a reversal. Right? Take each one of these very seriously. Box your zones, right? So you can prepare for them to induce reversals. But if we don't get those reversals, those reversal warnings, then you can hold on to this thing. I'll be looking around like 82 cents, which is a big ask, but we'll see what happens. I don't know much about ENA. I've been, I guess, a TT on it quite a bit, but I'll be mostly prepared for shorts right now. Let's see. Yeah, so if we get that higher high, mark this as a key level. Because if it breaks, you get that change character, and you can start targeting the point of control again. That's the bearish case scenario. Okay, so going back to Bitcoin. Anything else you guys want to look at before I got to head out? No, yes. I hear crickets. SPX. Like the stock or the token? Well, look at the token in case that's what you're talking about. Okay, it is. Okay. USDT. All right, and we got a request for XRP and Ethereum. And then I got to head out, guys, after those. So we have, let's look at SPX on Bybit. Okay, it's moving alongside Bitcoin right now. It gives me S&P 500 vibes a little bit. Just the 4 hour. This is uptrending momentum. Similar to Bitcoin, we just tested this uptrending momentum. It's been holding it up since March 11th, when it was at like 26 cents, and now it's at 78 cents. Pretty wild. So when we came back down to test this time, though, we also simultaneously tested the 50-day EMA. We did just break an ascending double bottom neckline right here. We have a supply concern right in our face. So like what I would be looking at is the confluences between this Fibonacci pull from this high to this low and this supply concern for a potential take profit area. So if you want to, yeah, so if you pull a fib, I have an automatic fib pulled right now using I have a tool that kind of draws the market structure for me. So it's like lazy mode trading. But if you pull your fib from this high to this low from here to here, you'd have your gold pocket level. And we have the confluence of the supply concern. And this kind of helps you refine areas of interest. So we do have this whole area of supply that we got to be worried about. It's mitigated up to here. But at here, this level, you should take it a little bit more seriously because you have confluences that start to stack in that area, right? We have wicks up there that could also induce an SFP reversal. Send this to back. Thanks for all the free analysis. Hey, I got to 12 pounds. Thanks, man. Appreciate it. Let's get the horizontal ray drawn here for the neckline. So this is the full body level on the daily, or the 4 hours, sorry. Go back to the 15. Yeah, we really just want to see that break of structure continuation. So we know that the neckline here has been honored as a form of support. If we get that, then we have a measurable base target. And I've got this funny feeling that it's going to bring us to the golden pocket. Yeah. So they get that golden, yeah, this is basically the golden pocket level we were talking about before, right? Right. So that's where I would be focusing on for our more macro swing bound target to here, $2.01. If we get there, then you take it one step at a time, right? Once we hit your like a measurable target or a area of concern, that's when you got to start to monitor again and babysit a little bit to decide whether or not you want to close your trade or if you want to try to stay in for the continuation. And that it shouldn't be your decision. It should be the market's decision, right? It should be based on what kind of market structure you see when we get there, right? If it's looking bearish, you should listen to the market because it can come right back down to where we started. But it's looking bullish right now. Macro is looking great. We just got to get that confirmation. That's all we're lacking is for the continuation. If we instead break below this level here, especially after getting a higher high, we get that change of character and we can start coming back down here. And I would recommend pulling a fixed range volume profile from focus on this high and then go to here, click and drag. So if we get acceptance back inside this valley area, we can come right back down to the 50-day EMA in confluence with the value area low. I'm more optimistic for it to go up based on all the conditions that occurred with this macro momentum being retested, the 50-day EMA being retested, and the double bottom posture. I think we're way more likely to go up than we are to go down. But you still got to wait for that confirmation. And basically, the invalidation point after the confirmation is once you get that higher high, this is your invalidation point. Because if that breaks after you get the higher high, then you'll have a 15-minute change of character. So that could be a good stop loss location to prepare for the move up. But that is SPX. I hope that helps. Let's go over to Bitcoin. Struggling a tiny bit, but one candle does not define anything. You get 12 euros and you get to call them pounds until you lose that weight. I've lost most of the weight that I planned on losing. I don't remember telling you guys that, but yeah, I'm focusing on like my health a lot more. So I need to lose some weight. I don't need to lose that much weight. I'm not like considered obese or anything like that, but I have visceral fat that I want to get rid of. And luckily, people call that the hardest to get rid of, but there are ways to melt it right off really quickly. XRP from Sal. And then we got to look at Ethereum for Constantine. Or Constantine. Sorry if I'm saying that wrong. XRP, we have an XRP layout. So let's pull that up. Okay, so XRP, we were talking about these bullish case scenarios, right? We had an opportunity to pick and choose during this period. Like during the trade hunting call yesterday morning, we had so many choices, and I'm sure I can't control what the members do, but I like to pick one asset at a time, right? Because if you're trading crypto and you enter one trade and it fails and all of them kind of look the same, then all of them are going to fail. So might as well just focus your attention on one asset and then trying to, rather than splitting your attention. So I chose Chainlink, and XRP performed basically the same way that we anticipated Hype and Chainlink to do. So we hit this barrier concern that we were worried about inducing a pullback or potential reversal. We got the pullback, but we never got the change character, right? And we end up coming up, going into through this supply concern like it wasn't even there. Most likely because of the liquidity that was induced from this range-bound behavior, right? We added a bunch of liquidity, kind of giving, think of it like a market maker magnet, right? So we came up, and we just melted right through this supply concern. If there was any residual orders, they were completely wiped out from the volume. And so we can delete this, we can delete that. So congratulations to anyone who may have taken that as well. It's looking good. But yeah, now we're in a supply concern. But what we really want to see happen is acceptance into this value area. And we haven't got proper acceptance yet. Right? What we need to have for proper acceptance is that basically just a break of structure within it. Right? So we're coming down, we're going to come down and try to honor it as support. And hopefully we honor it as support and then we get that higher high, because then we have a target extension for anyone who may have taken this setup. Right? So if we're here, if you're in this trade still and you get that break of structure, you can start targeting first the top side of this supply concern with a point of control. If we hit our head here, prepare to exit or take some profits. Because if you're way down here, you don't have to close like a large percentage of your gains if we have turbulence here, because you've got acceptance to a value area where we're likely going to be going range bound for a long period of time. So you could potentially hold it, even if we have turbulence here, to this value area high without the worry of it coming down and stopping you out way down here or knocking you out of the race here if you adapt your stop loss to the most recent break of structural low. So if we get that higher high, you could move it here, but you do risk it coming down, hunting you later. But good chance of range-bound price action now with XRP. Now if we zoom out, we adapt our trend line here. I don't know why it's drawn like that. But yeah, we have this downtrending momentum here. If we manage to get past this value area, hold it as support, then we can start targeting pretty much the all-time high again. But we got to focus on this. That could induce a lower high. But that's XRP. It's looking great. It's got that ascending double bottom vibes as well. It's just one of those few that have to break it still. Broke this internal one, but we got to break this more macro one here. And then this retest and higher high is really going to help define whether or not we get that break. Looks good. Let's go back to the 15-minute for anyone who uses these charts. It's a lot easier. We can delete some of this noise here and here. We can leave this down here. We can add a little bit of data here to help us out if we come back down to this area. Send it back. This could be helpful. This is a little demand zone here. We just got to wait for the rest of the data. Cool. We'll save layout, go back here. And next request was Ethereum. Yeah, you did. You were planning to lose 12 pounds and told us. Oh, cool. Okay. I don't remember telling you guys. It was just mainly the sugar I need to cut out. Where's the Ethereum? There it is from Costing. Okay. Let's pull up Ethereum. I wonder what it did, because that was one that I didn't really look at as much. We did look at it yesterday. Probably did what everything else did. Oh yeah, okay, we looked at this. I failed my entry here. Yeah. So we were trying to front run this move a day or so before we expected for it to occur. And I kind of got my butt kicked. So here I jumped in on the descending double bottom, which is one of my favorite double bottoms because it induces a change of character when it breaks. And there's usually more trade participants that jump in on something like that. So we got that change of character reaction in confluence with the descending double bottom off of like this demand zone tap. But I think I might have a whale following me. It's like sometimes I get a little shocked into the stop outs that I get. But anyways, we came down, grabbed all this liquidity from these lows, and part of that liquidity was mine from this one. And we swept into this demand zone. And after that, we broke down trading momentum and created this like larger double bottom posture here. So we internalized multiple double bottoms. We had one here, we had one here, we had one here, we had one here, and we had one here, right? We had 1, 2, 3, 4, 5, 6, 6 double bottoms. That's called fractalization. When you see that, it's like a little story trying to lead up to a bigger story, telling you that people are accumulating, right? You'll see them all the time with like head and shoulders, right? One shoulder will be like a head and shoulders sometimes. This one could be like a head and shoulders, and you have like a larger one within it. It's algorithmic market makers that are usually inducing that. So whenever you see that, it should help you build confidence in your setup. And here we had a run up after we kind of got that break, broke down trade momentum. We got acceptance into the valley area in a weird spot right here. Came up, had some turbulence at the valley area high. Probably shaking some people out for sure, especially after that change character reaction here. And then we came up, bounced off the more macro point of control, and now we're at the more macro value area high. So we can now adapt and change this fixed range volume profile pull to our current price action. We got above the structural value area high, which is right here. This is bigger picture stuff. If we zoom out on like the daily, what's going on here? Love getting whipsawed around whenever you change timeframes. But yeah, this previous value area here, huge amount of manipulation over the price action. Losing this high would mean coming down to like 3K basically. And that's what this helps us prepare for. In worst case scenario, if we can't get the higher high above $4,000, is such a huge key level. Think like altcoin season 5s if this breaks, right? Maybe not the altcoin season, but at least an altcoin rally. Altcoin season's a little bit less logical. But yeah, we definitely have a huge altcoin rally if we break above here because of the amount of altcoins that use Ethereum in its liquidity pool pairing is insane. So if Ethereum does well, a large amount of assets that are built from it or off of it also do well alongside of it. Just like how Bitcoin manipulates pretty much the entire market, it's very similar. Bitcoin has a lot of Ethereum pairing liquidity, and so if Bitcoin does well, Ethereum tends to do well because of it too. So Bitcoin's still the boss, but this Ethereum's the manager, Bitcoin's the boss, if that makes sense. All right, so I'll be mostly prepared for shorts up here. Just gotta wait for the structural evidence, right? Ethereum's positioning is actually an extremely bearish spot. So we'll see what happens. We gotta wait for the structure. If we get above 4K, then holy crap, right? If we get a break of structure above this, and then we can see it go to potentially its all-time high. but I'm more prepared for the bearish price action than the bullish. But yeah, if we get above 4K, then congratulations to any holders, because that's going to be a pretty intense run for you. If anything, it should be based on account size and not margin. Yeah, 100%. So your account size defines what kind of margin you use. So if you had like a $1,000 account, you should be risking to lose like $10 of that account on average, focusing on risking to lose 1%, right? And then how you manage that risk can define, it's all based on your stop loss guard, right? So if you have like a 1% drawdown, it's a very simple answer. You don't need to use leverage. You can use your whole account into the entry, risk to lose $10 in that scenario. Or if you don't want to put your entire account to the trade because you're worried about funding rate fees closing your trade, you could use like $500 worth of your margin at 2x leverage and still risk lose that $10 in a 1% drawdown scenario, right? So every scenario is going to be relatively unique. That defines your stop loss, defines how you manage your risk every single time. So, and your stop loss budget defines what kind of margin or volume you're going to be contributing to make sure that you're staying true to your stop loss budget. But yeah, it's a good point, man. It's good to bring that up in case, like, if I misspoken in any way, then yeah, don't want any beginners like making any mistakes. But yeah, I have calculators that help people with that. But there are a lot of exchanges now today that like have them built in. Like Blowfin, for example, has them built in. I asked Blowfin for like, it took 2 months to get them to add it, but I like been working with them for a while trying to get them to add that advanced feature. And then a whole bunch of exchanges start copying it immediately afterwards, which is kind of nice because then you have a whole bunch of like built-in features to help people trade. Why futures traders showing P&L percentage based on margin dollar amount and not just price moves? So confusing. People are making 800%, but not really. Because there are two P&L cards you can share. There's the account growth P&L card that you could share, but everyone likes to show the flashy percentage. It is based on your the leverage that you've chosen and the margin that you've used. It kind of like defines those P&L cards. So yeah, I get what you're saying. It does. Whenever you see those like 800% or 1,000% cards, what I like to do is I just visualize $1 in that scenario. Okay, they made 800% of $1, or they made 800% of like $2, right? You can't assume that they're trading 50x leverage or 100x leverage with like $1 million or anything or a $500,000 account or a $50,000 account, because first of all, that would create a massive amount of slippage for that person. So the likelihood of that occurring is really low. So you gotta like, yeah, stay grounded and don't let the foam, like P&L cards FOMO you into stuff. Like I'll show you my last one on Chainlink. I use like 3x leverage. Because I don't normally go in like more than 3 trades at once. It all depends on the drawdown. Like if the drawdown's over 1%, you'll notice my leverage will go down. If the drawdown of the stop loss is much lower than 1%, then you'll see my leverage start to go up. Oh, I have to log into Blowfin. I'm surprised I'm not logged in now. Oh, it just booted me out because my other computer. But if you're in the community, I'll share you I don't want to waste anyone's time. I'll share you the P&L card from yesterday's trade. Where's the calculator on Blowfin? Okay, so I got 2 questions about that. So I'll log into Blowfin so I can share here with you guys. The calculator is tricky to hide. It is hidden, but man, does it ever help. It's such a time saver. Because if I struggled, like with Bitcoin, it's a little easier. But if I'm trading other assets and I'm not used to their supply, then having a calculator is really, really helpful for managing your risk on the fly. I'm just getting my Google Authenticator and all that security stuff really quick here. Okay, I'm logged in. Let's go to Bitcoin. Sorry, it's just lagging a little bit. Yeah, so this is like an example of like a normal grounded P&L card. It's like 1.67%. They use like 3x leverage on the chain link trade. But if we go to, just gonna pull up. There we go. All right, so I just want to show you this calculator because it's super important. It'll save you like thousands of dollars worth of mistakes. So here on the right hand side on Blowfin, let's pretend we're going to be doing a short. Okay, if we're going to pretend we're doing a short, the first thing you want to focus on, like if you're going to jump in via market or not. So let's click on market and change your leverage. Let's say it's 5x or whatever. And let's say we're putting a stop loss here at 16. Let's say it's 116,782. What you could do to speed up the process of getting your stop loss data, right click, copy and paste. That will save you time. Click on TPSL. Click on the percentage icon on advanced. And then this will pop up. And this is going to show you whether you're focusing on longs or shorts, what your P&L is going to be based on your stop loss. So in this case, let's pretend we're pairing for a short, right? So we click on short, you paste the stop loss trigger price here, and then you just click and drag your margin here, and it'll show you how much you'll lose in the event your stop loss is hit based on the active price. So if the price goes down a little bit, this number will go up a little bit. So you just kind of like prepare. What I try to do is like if I'm trading $1,000 account, which I am right now for this challenge, I want to try to get this as close as I can to $10. In a perfect world, I can go over here and just type the word, the number, like $10, and then click, short, and then we're good. But they don't have it that refined yet. But yeah, your goal is to try to get right close to your stop loss budget as possible before entering. And you want to try to make sure that depending on how you're managing your risk or your win rate, that you should be trying to focus on having your take profit worth 2 times that value. And that will support like a lower win rate, right? So in this case, we need to hit at least this price to reach around like $20 to try to gain. You're risking to lose $10 to try to gain $20 in this scenario, right? If this were to break out and confirm. But that's the calculator that's built in. It works for both directions, long and short. But this is a really, really easy way to be consistent. Only one who did that stuff was Bun. Yeah. But Bun, he did over risk for sure. If you're able to follow my signals and grow your account from $250 to $800,000 in just like 6 to 8 months, then you're obviously over risking, right? That was probably during the time I had a crazy win rate. I know his biggest gain, like what really got him started, was the XRP trade signal I gave, and that grew his account to like $200,000. But yeah, he was risking to lose too much. So I'm hoping he's still okay. Um, but yeah, because it's very easy to get caught in that. You got to start, if you get that many wins and you grow your account that fast, you really got to like step back, slow down, and do things properly from there, or else you're going to lose it all. And I'm hoping that's not the case that happened to him. But anyways, yeah, that's how you'd use the calculator built into Bluefin. Super helpful. I hope that helps you out. He was doing 50K, 50x. yeah, that's nuts. Yeah, you can delete your whole portfolio doing stuff like that. If your stop loss makes it so you only lose like, say 5K of that, still a bit much. Like 500 of that, be okay, but can you share your thoughts on Bitcoin plus the POCB? Yeah. I have the POCB on my chart. So the POCB is basically like an evolving point of control. It acts like a lot like a Bollinger Band. You have the initial setup, you have a center median average here, which is what's on my screen. And then you'll have a surrounding one. Make it yellow so it's easy to see, like this. But my main interest in this and what I use it for is just the center moving average to control short-term burst trading bias. So I'm looking for very specific conditions for my burst trades. So I'm in and out really quick to allow me to jump in on the trade. So the conditions are almost solely based on the order books. Is there clearance in the order books during the time we're above? If we're above the POCB, I prepare for shorts. If we're below the POCB, I prepare for longs on the 15-minute time frame. So make sure I get on the right time frame for that. And then I look for a candle that is not in contact with the POCB during those windows. So if we, for example, had, I know this is kind of a complicated subject, but if we're below it right now. So let's say, for example, we had a candle that was not in contact with the PCB, and I mean body-wise. If a wick touches it, it's fine, right? It's where the active price is and how the active price closes. And if it's below here, we'd be looking for longs. And if we had a clearance in the order books, it creates like, visualize like a gate that's in front of you. And if there's a clearance in the order books where there's like a very, very, very small amount of orders relative to the volume that's going on at the time, then think of it like a gate that just opens and price action moves really quickly to the next stronger area of interest in the order books here. So think like these tiny little steps or a sell wall being like a potential barrier. The events happen about 4 to 5 times per week if you were awake 24/7. So that it means like it might not be happening during the time where you would normally be trading. So it's not a very common thing, but when it happens, you have like no drawdown. You jump into the trade, there's no drawdown. There might be a wick or so in there in your where it might have a little bit of drawdown once in a while, but that's only like 20% of the time. The other 80% of the time, when you have these burst movements, there's no drawdown to where you would put your stop loss. And the stop loss location is not based on market structure, it's based on a candle count. So if you have, it's very mechanical. So if you had like a, let's say a clearance in the order books here, and we're below the POCB, you just count back 2 candles and you just put your stop loss below that. And then you have your first trade right after. I'm gonna have to do like at least 10 trades with the community, or because you can't back test this. You only can forward test it and forward practice with like a demo account, for example, if you're trying to figure this stuff out. So you can't go back in time and say like this is all the times that this occurred. You have to forward test it. So I would like to record myself doing it like 5 or 6 times, so you guys have a really good understanding of how it works. But again, it's that rarity. It makes it a little bit difficult. So it has to be during a period where I'm paying a lot of attention, so I can then press the record button during that moment and get ready to like show you guys like in a lesson inside the course. Why can't you? There's some strategies you cannot backtest. So let's say, for example, you are trading based on live data. So you can have rules that you can backtest. For example, a change of character. You can look back in time for a change of character. You can look back in time when we're above a value area high. You can look back in time for how we behaved near VWAP. But you can't look back in time to how the order books looked, right? During that time. And that's why this particular strategy, you can't really back test. And same with expired data, like liquidation heat maps. If you're trying to build a rule with your strategy saying, I will not enter along unless I would tap into a liquidation leverage area with $100 million volume or more, what would be my percentage win rate if I were to enter a change of character or an SFP after tapping that area? You can't back test that. You can only forward test that. Because the data will be expired. You won't be able to go back in time and see how the liquidations looked. Unless there's a tool out there that allows you to do that, then yes, maybe you can backtest that. Because then you can look at the price action history relative to that moment if you have that data. So that's an example of a strategy that you can only forward test and you cannot backtest. Yeah, yeah, exactly, Coma. Real-time stuff you can't really backtest, unfortunately. Unless people will decide to make like a library of that kind of data. So if there's any developers listening, like that's something you could potentially do. Yeah, it's a big project, or it could take a lot of memory storage, right? But yeah. All right, guys. Well, I got to head out. I had a lot of fun. I appreciate everyone's been liking, subscribing, sharing. I love all these questions. It helps people learn. If you have any friends or anyone like that who are struggling with trading and they want to learn how to trade, I'm an open book. I will answer any question without guarding it with a paywall. Like I have a course, but you don't need to take the course to ask me questions, right? The course, it will definitely be helpful for you to like learn things in the proper format, but you can definitely reach out to me if you have any like questions you're struggling with your trading, so we can help you get past that knowledge barrier. All right, guys, I'll see you guys in the Discord. If you have any questions, like I said, reach out to me and have yourself an amazing day. Bye, guys. I'll see you tomorrow.